So, Mr. Oswald, this is for you. This is for Haphazard. You're new here also. I'm going to show you exactly where I got with this trading strategy.
Which my dad doesn't let me call it that, but I do. Hi, I'm Tracy, and me as you being part of my internet website called Thingy, which my dad doesn't let me call it that, but I do.
Yep.
Being part of that, you're going to be getting weekly lists of...
There's over 20 days.
That's me. 15 years ago.
There's over 21 days in the month of March. What does that mean? That means every single day you can buy a different stock. Every single day there's a different company paying out dividends.
And here goes.
Seriously.
So
I'm picking just one company per month.
hold on a second. So the reason why I'm showing you this video from 15 years ago, okay? My 9-year-old daughter jumped on my lap and said, Daddy, what are you doing? Can you teach me? Okay? So can you teach me? How do you teach a 9-year-old how to trade? Well, it's got to be simple. It's got to be safe. The profits have to be consistent. Simple, safe, predictable, and consistent. I'm 45, planning for retirement. Okay, great. Sit and chill. So my 9-year-old asked me, Daddy, what are you doing? Can you teach me? So teaching a 9-year-old, simple, safe, predictable, consistent, no way for her to lose. That's the 5 criteria. 5 criteria. Simple. She's 9. Safe. Don't want her to lose. Consistent. Can she get money every single week? And predictable. Do we know what we're going to make before we do it? And then last but not least, no way for her to lose. Now, when I say no way for her to lose, let me elaborate. Now, I'm 61. I remember as a child there being Pepsi and Coca-Cola. I can almost guarantee, nobody knows the future, but pretty much safe bet that Coca-Cola and Pepsi are going to be making Coca-Cola and Pepsi long after I'm gone. They've been doing it since the 1800s. Why should they stop now? For over 100 years, they've been making Coca-Cola. More than likely, they're going to continue doing it. Ford, General Motors, they've been in business for over 100 years. I'm pretty sure they're going to be here when I'm gone. Okay, so when I say safe, predictable, and no way to lose, I don't want to do a company that has that possibility of losing. That's been around for at least 100 years. That makes sense to me. Okay? Janar, how are you today? And asking, how are you doing? Uh-oh. Nope, I don't. So, I hope you understand. It's a simple, safe, predictable, consistent strategy specifically designed for a 9-year-old. Okay, so along with that, that came with 5 rules. Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Rule number 3, make sure the company's consistently profitable. Rule number 4, weekly options only. Rule number 5, make sure all the numbers work. What am I buying it for? What am I selling it for? Is it more than 1%? That's the rules for my 9-year-old. And I've been doing the exact same thing for the past 15 years, sharing it for free with you good people. So when you ask a question like that, Mr. Oswald, yes, I know how to do all that, but I don't give it away for free. This here I do. Now, I can make you one guarantee. I'm not going to have a pitch by the end of the night. I'm not going to try to sell you anything. That's not what I'm doing here. What I'm doing here is creating a video blog for my children and my grandchildren so that when I'm gone, they'll have something to reference. Okay, you just so happen to be here because this is what I'm doing and you saw it. Okay, I'm not trying to sell you anything. Now, I do have stuff to sell. We're all adults here. We know how that works. You go to the website, you buy whatever I'm selling. But I'm not going to try to sell you anything here. Okay, fair enough? So when I say I'm only looking to do one trading strategy here and only one, thank you. It's called education. Thank you. So I'm doing one strategy. It's called a covered call. Thank you, Mr. Oswald. It's called a covered call on a dividend stock. Okay, the strategy, I call it dividend capturing 2.0. Okay, because when we first started, we started dividend capturing. The strategy is over 400 years old. You buy a stock, you get the dividend, and you move on to the next company. Buy a stock, get the dividend, move on to the next company. It's simple. It's a lovely strategy. If you do it right, it works great. And my 9-year-old daughter was averaging 5% a year. No, sorry, 5% a month, which is over 60% a year. Just trying to up my strategy, reduce risk as well. Okay, exactly. It's exactly what I do here. I'm 61. I do not have the luxury of being wrong. And it is a luxury. For those of you that have 5, 10, 15, 20 more years to go before you retire, you have the luxury of being wrong. For people that are retired like me or getting ready to retire, we don't have that luxury. And it is a luxury. You can mess up and you can lose a bunch, but you have time to recover. Me, I'd have to go back to work. Yeah, no, thank you. I've been working since 1973. Trey Smith, how are you today? Andrea, cool. Okay, Trey, we are going to look at Ford in a little bit. Okay, so let's keep on going. Let's get out of here. No, that ain't it. That ain't it. That ain't it. Where the heck am I? Okay. Yahoo Finance. That's what I want. Yahoo. Okay, so hopefully everybody's on the same page. Can you do call options on Robinhood, or do you recommend Thinkorswim? StudiQuick. Okay, StudiQuick. I have a Robinhood account. I also have a bunch of Thinkorswim accounts. Yes, you can do call options on Robinhood. I love my Robin. I really, really do. I have it at my fingertips. I can do it while I'm on the elevator. I can do it in the bathroom. I can do it while I'm waiting for the waiter to bring the food after I order my lunch. So I order my lunch. I wait for the waiter. And then what am I going to do? So I bust out my little Robinhood. Okay, let's roll that one forward. Let's buy some of these, sell some of those. It's simple. It's easy. I'm actually working on a little program specifically for that. So let's keep on going. Pierce, how are you doing today? Cool beans. Uh-oh. Simone, what's happening? So what's you long hold? Oh, haphazard. The longest I've ever held anything is 9 months. That's the longest I've ever had anything. One Love, we're going to look at D a little bit. Okay, we're going to at Dominion in a little bit. All right, hold tight. Thanks. We're going to get to that. All right, so Pierce wants to take a look at Dow and Dollar General. I'll write it down. Dow, which we bought last week, and Dollar General. I did buy some Dow last week. All right, so let's... What if the numbers don't make sense? What's a good strategy to remedy it? Okay, hold on a second. If the numbers don't make sense, you don't buy it. It's that simple. I mean, think about it. It's that simple. The numbers don't make sense, it's a no. AJ, you don't care about the long-term capital gains taxes, bro? Oh my goodness. I love it when somebody asks me about taxes. I do. Now, this is the way I look at taxes. Okay, see if this makes sense to you. Would you go to a Rolls-Royce dealer and ask them, hey, what kind of gas mileage does this thing get? I'm waiting for your answer. Hey, AJ's not answering. But think about it. If you're asking about long-term capital gains as opposed to short-term capital gains, really? You would seriously go to a Rolls-Royce dealer and ask what kind of gas mileage the Rolls-Royce gets? Dude, if you have to ask the gas mileage of a Rolls-Royce, you can't afford it. Plain and simple. Seriously, plain and simple. You're going to ask the gas mileage, you can't afford it. So, to answer your question about taxes, it is your legal right to make your tax liability as low as possible. Legally. Okay? So if there's a way for Warren Buffett to pay less taxes than his secretary, which he says that all the time, I pay less taxes than my secretary. Don't you think there's something to it? that you should be looking into it? How old am I? Why, Mo, why does it matter how old I am? Either what I'm saying is true or what I'm saying is not true. Now, I don't expect any of you to believe what I'm saying. You know, I'm just here for my grandchildren, great-grandchildren. So, hey, guys. So hopefully, you know, they'll say, hey, there's Papa G. I like to think Papa G's not lying to me. But here's the thing. You guys don't know me, and that's okay. But I'm hoping my children and my grandchildren will at least appreciate that the grandfather took time out to do whatever he needed to do. All right, so needless to say, I'm 61, if that makes you feel better, Mo. Mo, you will at some point in time be on this side where you will be 60 and you'll be talking to other people. He's 35. Okay, Trey, I'm kind of curious. What do you mean by go electric? Kind of curious. Yeah, baby's in the house. So is Ditto. Ditto's in the house too. All right, next on the list. So EPD. I said no to EPD because I don't like buying at the high. Okay. AJ, can you explain more of your tax plan using margin to reduce taxes? Or Roth? Okay. Now, AJ, what I always tell people, if you're serious about trading, I mean serious about trading, you need to talk to a tax strategist or a tax planner to help you set up your account so you legally don't have to pay taxes, okay? Mo, you're 14. Mo, what are you doing here? Seriously, 14? Come on, you have better things to do than this. Don't they have, I'm not going to say it, a mixed company here. No desire to get myself in trouble. Okay, you're 14 going on 15. Dude, this is not something that you should be looking at. Well, I can't really say that because my daughter was 9 when she was interested. My grandson's 5. He doesn't really know what's going on. He thinks it's fun. He thinks it's fun to stand here and talk to everybody. Anyway, let's keep on moving. Next one on our list is going to be SPCE. What the hell is that? SPCE. Virgin Galactic. Hell no. Okay, well, for the fun of it, let's see how often has SPCE increased its dividends. SPCE. All right, it's going to pop up, and we'll go take a look at it. Because I'm going right to the, what do you call it? Right to the details. Where is it? SPCE. All right. SPCE has no dividends at all. Okay, see that right there? Forward dividend and yield, nothing. EX dividend date, nothing. So why am I looking at a company that has no dividends? Who came up with that one? RL. What the heck is RL? Okay. Verizon, that's an easy one. Let's take a look at Verizon. Verizon's on my list, so I don't need this. Okay, VZ. Interesting. Quick. See, it should take you 3 to 4 seconds to analyze a 1-year chart. That's it, 3 to 4 seconds. Let me show you specifically what I'm looking at. The high, the low, where was it, where is it, and what's the motion? Look at this, up, down, up, down. Now, here we are here, 43.99, so we're looking at the 44. All right. The 44 is 44, 1%. Okay, so if I like Verizon, it's going to give me 1%. That works for me. So let's take a look. A year ago, Verizon is sitting at 40.27. The bottom of the year was the beginning of January. That was 37.64. The high of the year is 47.33, and that was the beginning of March. But from the high, check it out. Down, up, down, up, down, up, down. Now it's going up. Now remember I told you stocks only do 2 things. That's it. They go up and they go down. That's it. If you're expecting a stock to come to your house and take the dog for a walk, ain't going to happen. If you want the dog to be... if you're expecting a stock to come to your house and walk your dog, it ain't going to happen. All right? It goes up, it goes down. Okay? Up, down, up, down. That's all they do. That is it. If you like a stock, keep an eye on it. Is it heading up or is it heading down? That's it. Okay, so right here, the low was Wednesday, Thursday was higher, Friday was heavy, which means tomorrow is a deciding day for Verizon. If it goes up again tomorrow, that's 3 days to the upside. That's my cue to jump in. PRLB, Pro Labs. AJ, I'll take a look at that. PRLB. But, AJ, I'm just kind of curious. Okay, you like this stock? Awesome. Can you at least give me an idea of how often have they increased their dividends? So I'll wait for you to answer. Okay, so go into the data stream, okay, or the financial website that you use and see how many years has Pro Labs increased their profits. Years, decades. I want to. If it works, great. All right, so Verizon, that's the 90-day. I want to look at the 30-day. 30 days is on the 418, which would be right about there. Okay, so here's the last 30 days. 30-day high, 30-day bottom, okay? Profit taken, jumps up, comes back down again. Here's your turn right there. Okay, tops here, comes down, turns around, 1, 2. Next day is tomorrow. Is it going to work or is it not? All right, so the 44s, what do the 44s look like? All right, 44s right there. Let's do this real quick. Here we go. 44s right there. Okay, one contract. The reason why I do one contract, I don't want to freak people out about the money. Because, one contract is X amount. 10 contracts is 10 times. All right, so here's the numbers right here. By one covered call Verizon 100, that's the weeklies, 23 May 25. That's this coming Friday. The $44 call option at the market to open. Okay, so profit $75. This could cost $4,300. What does that look like? Well, bring up our calculator. $75 divided by the cost of the trade, $43.25. $43.25. That comes to 1.7. Verizon. Not quite what I'm looking for, but don't get me wrong, it's over 1%. Over 1% is a great idea. Garrett, is TMO still on the list? We'll take a look at it. James, the answer is never. I have no idea. James Ford, why is it never? TMO. Didn't we write TMO down already? We did. TMO is coming right up. Next on the list, Estee Lauder. Estee Lauder, hold tight. Oh, nice. Now, it takes me 3 to 4 seconds. 3 to 4 seconds, okay? The high, the low, where is it? Look at this. Down, up, down, up. Simple. It's in an upward trend. The bottom was a couple of weeks ago. So it's bouncing off the bottom, heading to the upside. Now all we got to figure out is what are the details. Okay, Lumina. Okay, Riley is on the list. I think it's 4 more. Okay, UNH. Everybody likes University of New Hampshire. That's next. That's coming up next. But here we are. Estee Lauder. High, low, all kind of nice. 65.17. We'll be looking at the 65s, which are going for 132, which is 130. Yeah, it's 2%. Well, hell, I like 2%. See, the stock price, 65. The 65s are going for 132. Well, 65 and 65 is 130. That's 2%. I like 2%. Let's check that one out. Let's do it quick. We did them on Friday. All righty. PRB, manufacturing, no dividends. All right, so much for PRLB. That's a no. Thank you for that. They don't even have any dividends on PRLB. Okay, that's a no. Revenue, you'll check. Cool beans. We did them on Friday. Total revenue in 2023 raised 3% from 2022. Okay. Okay, Frito, we're going to take a look at UNH in a little bit. All right. Antoine, good evening. Mo, no cursing. I don't curse that often, Mo. Very rarely. You know, the funny thing is, right? I'm hanging out with my kids and we're at my mother's house, right? And my children will swear in front of their grandmother, and you should see the look. And it's like, holy cow, I'd never swear in front of my parents. I don't know what it is with kids nowadays. In 2024, they lost $3 million, but then reduced costs of revenue by $10 million. So why are we looking at it? Right. TW Wright. New here. So if a stock qualifies, you buy the stock, then sell a weekly covered call. Absolutely. You're new here. And you got it in less than 2 seconds. Cool beans. John Fia, good evening. How are you doing today? Cool beans. All right. So I'm caught up with all the questions. All right. So I kind of like the movement here. Let's take a better look at it. The high of the year was 134. Now, for those of you that are new here, if you're going to play this game, listen very, very closely. Okay? Estee Lauder, high of the year, 133. The low of the year, right around 50 bucks. That, my friends, is more than a 60% drop in price. If you're not ready to buy something and watch it go from 130 down to 50, this is not a game for you to play. Because stocks can and do fluctuate, anywhere from 20 to 70 to 80 to 90% per year, from their high of the year to the low of the year. Are you ready to buy something and watch that happen? Well, I've watched it plenty of times. I have rule number 1. Never buy anything you're not willing to take to the grave with you. If you're not willing to buy it and hold it to the day you die, then don't buy it. Okay, if the company's profitable, great. Are they going to continuously be something you want to hold on to when it's from 133 down to 60, down to 8, down to 40, down to 50, whatever? But if it drops that much in a year, are you willing to do that? Well, rule number 1, never buy something you don't want to hold on to for the rest of your life. Rule number 2, never sell at a loss. It defeats the purpose. Rule number 3, make sure the company's consistently profitable. Rule number 4, weekly options only. Because you cannot get weekly cash flow unless you have something that trades on a weekly basis. That's why we do weekly options. Okay, I don't do monthly options, and I don't do just plain stocks. Every position I own has a weekly option next to it. Now, out of the 10,037 or whatever there was, okay, there's only about 300 companies I like. If you get a pencil, piece of paper, here they come. You ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and then Warren Buffett's. That's 5 lists right there. Those 5 lists of companies. And you can go to Google and search Dividend Kings List 2025, Dividend Aristocrats List 2025, so on and so forth. And they'll give you every single stock that we're looking at. There's over 10,000. I have no desire whatsoever to look at anything unless it is consistently profitable and has weekly options. Okay? I have 2 criteria, only 2, when I'm looking at something. Consistency of profitability and weekly options. All right, hold on a second. John Fia, good evening. Karem, say you see configurations of Verizon tomorrow to get into it. You have a time window. Yeah, first thing in the morning. Occasion for whatever. Hope that's not gold in the background. No, it's not. Kindly check CVS. We're going to take a look at CVS in a second. Well, it's on the list, CVS. What's the minimum you buy on your options? Okay, number one, you weren't listening. I don't buy options. 80% of all options expire worthless. So think about that for a second. If 80% of all options expire worthless, why would I want to buy them? I don't. I sell options and I look forward to that 80% being useless. Okay, T. Wright. How do you determine how much stocks you should buy of a company? Do you mind sharing your formula? Absolutely. You ready? E.D. Elliott. You got an issue there, Elliott? You want to share with everyone? You got some erectile dysfunction going there? No, Elliott, seriously. E.D. Consolidated Edison. They've been in business for over 200 years. You hear that? A company that is a dividend-paying company that's been in business for over 200 years. Consolidated Edison. Unfortunately, Elliott, Consolidated Edison only has monthly options, so I don't trade it. So back to T. White. Here's my formula. You ready? Oh, it's too quick. Okay. All right. So listen closely, T. White. Also, you do. It's too quick. If I have $100,000 in my account, okay, I want to do 5 trades. 20%, 20%, 20%, 20%, 20%. That's it. If I have 4, it's 25%, 25%, 25%, so on and so forth. AJ, I can't really believe you're asking me this, AJ, but you're new here, so I'm going to show you. Okay. SPY and Q. Now, some of the veterans have been here for a while. They're probably thinking to themselves, oh, no, not those. Okay, so AJ, we'll look at SPY and QQQ in a little bit, and you might be enlightened at what you find. Okay. Don't. Hello, Chris Ross. Do you ever long above previous day high? I have no idea what that means. Do you ever long above previous day high? Okay. If you can clarify that question, I'd appreciate it. All right. So let's take a quick gander. Okay. Down, up. Well, that's a yes. I like that movement. Look at the numbers for Estee Lauder. The current price is 65. The 65 is going for 132. That's more than 2%. All right, well, let's dive in a little bit deeper and see if we like Estee Lauder. Okay, the last 30 days for Estee Lauder would be right there. What do you think? Okay, here's the bottom 30 days ago. She shot up. Now she pulled back and only 1 day to the upside. So Estee Lauder is not quite there. Not yet, anyway. I like 2 days to the upside. And then on the third day, I will jump in. Okay, no to Estee Lauder. ACHR, Archer. Now, this is Archer Aviation. And that's a hell no. Did you see how quick that one's? Hell no, look at this. Okay, 30-day bottom, 30-day high. It's the time to sell, not the time to buy. Holy shit, SOXL. SOXL. Is Acorn app a noob app? To be 100% honest with you, Eric, I haven't looked at it. Okay, NON, non. You want to take a look at spiders? Somebody already asked me about spiders. We're going to take a look at it in a little bit. Hang on for a few more minutes, and I'm going to show you why you don't want spiders. That's for me, anyway. I won't do it. I won't even do SOXL either, because I'm looking for something specific that you guys aren't doing. John, please discuss the membership plans. Okay, see, John, I promise I'm not trying to sell anyone anything. Okay, I did. I made a promise. I'm not trying to sell anyone anything. But when someone asks, I'm going to point it out. John, if you're really interested, drop me your number. I'll give you a call. We'll chat. I'm not going to try to sell you anything. I promise. You got my word. I'm not trying. I call people every day. I call anywhere between, I don't know, 2 and 8. Because I get 8 channels here. I say it every night. You want to chat? Drop me a number. I'll give you a call. We'll chat. And I promise you, I will not try to sell you anything. Okay, that's my promise. I promise not to try to sell you anything. I'll answer your questions. Okay, I'll give you 15, 20 minutes of my time. No charge at all. Just leave me your number and I'll give you a buzz. All right. No, to Archer. So here we go. I had 6 people asking for this thing. University of New Hampshire, UNH, Universal Health. I just like calling it. I like United Health. I like calling it University of New Hampshire because I'm from the Boston area and we hear it all the time. So explain to me, the 7 of you who asked about UNH. This thing had a couple of weeks ago was at $600 a share. Now it dropped down to $250. Why the hell do you think I'd be interested in that thing? Think about it. Why would I be interested in a stock that was $600 a couple of weeks ago? Now it's down to $250, $290. Hell no. I don't do stocks over $250. That make me uncomfortable as hell. From $600 down to $250. Yeah, no thank you. I think we can quit right there. Okay, look at this. High, a little over 600. Big gap down there. Another gap down here. Another gap down here. Here's the bottom right here at 250. Well, now we're at 291. Well, that's 1 day to the upside. I like 2 days to the upside. And then on the 3rd day, if it's continued to go up, yeah, fine. But let's find out how wonderful is UNH with their, what do you call that thing? UNH. With their dividends. How often have they increased their dividends to their shareholders? Oh, look at that. Only 2.88% yield. Well, I can get 2.88% yield on a company that's at $10, $15. Why would I want to pay $600 for a share? No, historical data. Okay, so I like, as a financial website, I like Yahoo Finance. You guys can use whatever you want, but I do suggest, if you're serious about investing, find a financial website. Because the information you're going to get from here, you're not going to find it on your trading platform. Or at least I haven't found one that has it all. Hey, Matham. Hello from Sydney, Australia. Well, good evening to you. Greetings. What do you guys say over there? Oi, mate. That about right? Oi, mate. All right. So let's take a look at historical data. Historical data tells you everything you need to know about the stock itself. The opening, the high, the low, the close, from today all the way down to however long their history is. And that's important information. It gives you a good idea of what the momentum looks like. So we're going to go to UNH. Now, I want to look at the historical prices, but I want to look at the dividends. So the dividends will tell me how consistently this thing increases. Okay, now I want to go look at all the dividends. And it goes all the way back until 1994. Okay, so I want to look at 2005. Okay, so we're going to go from 2005 and go forward. Now, hypothetically speaking, if this company is consistently profitable every single year from 2005, the numbers should go higher and higher and higher and higher and higher and higher. That's consistency of profitability. Every single year, the company makes more money. Well, if not, why the hell are you investing in it? Think about it. If the company's not consistently profitable, if next year the company makes less money than this year, well, isn't that your clue to get out? Well, there's over 300 companies in the stock market that consistently higher and higher and higher and higher and higher dividend, higher profits. Well, that's the reason to get in business in the first place. Who wants to go into business? Hey, I think I'll go in business and make less money. That doesn't make sense. All right, anyway, from 2005, hypothetically, it should increase every single year for the last 20 years. So let's take a look. 2005, 1.5. Okay. 2006, it doubled. Well, that's freaking awesome. Think about it. From 1.5 to 3. That's doubling. That's freaking awesome. But look at this. And from 2006 to 2007, nothing. 2008, nothing. 2009, nothing. 2010, nothing. So the first year, well, 20 years ago, it was 1.5. Then it went to 3. And then 1, 2, 3, 4, 5. 5 years in a row, it did not increase. All right? But look at year 6. It went from 3 to 12. And then it was at 12, 16, 21, 28, 37, 50, 62, 75, 90, 108, 125, 145, 165, 188, 210. Well, got a slow start, but it had a nice return. Take a look. It went higher and 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 higher. Well, that does qualify. Great. But I got an issue. Okay? Especially when it's up in the $600 area. Well, now it's at 291. Well, 291 is not that bad as compared to what it was a couple of weeks ago at 600. Maybe it might be a time to jump in because the dividends keep increasing. But right here, you got 1 gap down, 2 gap downs, 3 gap downs. So now here's the bottom, Thursday. Well, that's the bottom of the year. Okay, you make your most money buying low and selling high. Well, the bottom's there. 1 day up. Well, Monday would be 2 days. 3 days would be Tuesday. So the soonest I would get into something like this would be Tuesday because I want 2 days the upside, and on the 3rd day, I want it to be higher yet again. That's me. All right, Jamie, good evening. Angel, good evening. What are my thoughts on HCTI? Never heard of it. HCTI. We'll take a look. Dwight. So if I have 100 grand, find 4 $25 stocks, write the calls each week until they are called away, start over. Yeah, why not? AJ, Apple. AAPL. David and Lisa, thanks for looking. You got it. Yep, Jacob, that's UNH right there. Okay, we just looked at it. Okay, if you like UNH, the bottom was Thursday. Okay, the bottom of the year was Thursday. If you like UNH. Okay, so let's take a look at, I forget who asked for this, but I know 3 people asked for SPY. Okay, let me show you why I don't like SPY. Okay, first thing I want to do is SPY. And the Qs are going to be almost the exact same thing. All right, so first and foremost, you see this? $594 if you like SPY. Okay, the spiders, the ETF. Okay, so let's look at the dividends for SPY. Go all the way back to 2005. Okay, here we go. 2005, you ready? I forget who wanted SPY. N-O-N, you wanted SPY. Someone else wanted it also. Take a look at this. 2005, 46, 48, 52, 67. Ooh, that looks pretty good, don't it? 51. Wait a second. Hold the phone. Hold the phone. Okay, for 2005, 46, 48, that's higher. 52, that's higher. 67. So why would I want to get into a company that's profitable, and then they're not? Then they're going backwards. Why would that make sense? That Drazik, dude, how you doing? Whoops. How you doing, Drazik? Okay, so if it goes higher and higher and higher, and then all of a sudden it stops and it goes backwards, okay, wait a minute. Hold on. It actually gets worse. AJ, it gets worse. Hold on. Okay, so 46, 48, 52, 67, 51, backwards. 55, 57, 79, 55, backwards, that's twice. 65, 71, 77, 64, that's backwards 3 times. 64, 69, 66, 69, 71, 56, backwards 4 times. 51, backwards 5 times. 50, backwards 6 times. 59, 48, backwards 7 times. 53, 60, 65, 55, 8 times backwards. 62.8, 62.5, backwards again, that's 9 times. 77, we're not even halfway there. But just to let you know, that's all they do. They go up, they go down, they go up, they go down. Are they consistently profitable? No. To make matters worse, hold on. It gets worse. Believe me, it does. Watch this. We're going to go from the summary because, this is all they do. Okay, profits go up, profits go down. Profits go up, profits go down. I don't know why the hell you're investing your money there. But hold on, it gets worse. Seriously, it does. SPY, watch this. We're going to come over here to look at the summary. The summary is going to give us detailed information about the stock and the company itself. Kind of condense it, give you some good stuff to chew on. You ready? Here we go. Here it is again, right there. Right here. Here we go. The open, the bid, the ask, the high, the low, the day range. But look at this right here. The yield. Do you have any idea what the yield is? The yield is basically the rate of return. How much are you making for your investment? Okay, AJ, you see this right there? 1.29. You're paying over $500 a share to make 1.29%. Not for the week, not for the month, not for the quarter, but for a full 12 months, a whole year. Why are you investing your money to make 1.29%? That's it, 1.29. How do you predict if the stock market will generally increase or decrease on Monday? I never said it would. Okay, what I said I'm doing is I'm looking at good quality companies that are consistently profitable. Okay, we looked a little bit earlier. You just got here. So we did find out that there's over 10,000, and I think it was 40 something, 10,040 different companies that we can choose from. So out of all those 10,000 companies, which do you want to invest in? For me, it's companies that are consistently profitable. That means every single year they make more and more and more and more money. To me, that just makes sense. Well, if you take a look at all 10,000 of these companies, only about 300 are consistently profitable for more than 20 years. Those are the ones I like. Okay, Danny, you want to look at W? I have no idea who W is. And that's not a good thing, Danny, if I have no idea who it is. So anyway, AJ and a couple of the others, you like SPY. I don't understand why. Don't you look at the numbers when you buy something? I mean, seriously, the numbers are right there. What is it costing? What's the PE ratio? Look at the yield. Look at the daily, the year-to-date daily total return, 1.69. Okay, I'm showing you trades that are over 1% every single week. How is Google? Okay, H-Team, seriously, go take a look at Google. How many years has Google paid dividends? 1 year. I will look at Google for consideration in 19 years. AJ, a quibble I could have is SPY isn't a company. It's a collection of the top 500 companies. Yeah, you could quibble about that. You could. And you'd be 100% correct. But SPY ETF is a conglomeration of the 500 top companies. And they are paying 1.29%. So, you quibble all you want. Quibble all you want. It doesn't change the fact that this year they're at 1.69. Last year it was 1.29. Okay? Numbers don't lie, dude. And I'm not trying to sell you anything. So I don't have an agenda here. Okay? It depends on how you look at it. MSTY has great dividends. Yes, they do. But did you look at the other numbers? Okay? No, seriously. Take a look at the other numbers for MSTY. Number one, they haven't been in business for more than 2 years. The company's not even 2 years old yet. 2 years. You're giving your money to a toddler. Okay, the stock market has been around for 400 years. 400 years. Oh, 422, I believe. Okay? 422 years. And you're putting your money into Misty, MSTY, and they've only been around for 2 years. So, hell no for me. Besides, I looked at the numbers for MSTY. There's no possible way on God's green earth they can sustain those numbers. You cannot pay out more than you bring in. And that's what MSTY is doing. I have stocks that don't pay dividends. Is it a good thing or a bad thing? Okay, Haiyan, okay, I can't tell you anything what is right or wrong for you. I know nothing at all about you. Okay? What I'm doing is I'm sharing what I'm doing. What I'm looking for, me specifically, I'm looking for cash flow. Weekly cash flow. That means every single week I want something from each and every single position that I have. Now, I have 7 accounts. I share 3 of them publicly. I share with you every single trade that I make. Okay? So, that being said, you can see everything that I do. I'm looking for cash flow. I'm not looking to buy a stock, hold on to it, and wait and hope that it goes up. Because I'm past that point in my life. At this point in my life, I am retired, and all the money I have has to last me for the rest of my life. Either that, I go back to work. I don't want to go back to work. I kind of like doing whatever I'm doing. David, love MRK. I actually do own some MRK. So we'll write that one down. We'll take a look at it. MRK. Next on our list, TMO. What the heck is TMO? Foxtrot. Me too. You want cash flow? Foxtrot, this is the first time I heard from you. Okay, TMO. Let's get rid of this. And let's put TMO here. TMO. Who's tweet? TMO? Thermo Fisher Scientific. Okay, 412. Okay. All right, so let's see. How often has TMO paid out dividends? One way to find out is go right here. TMO. And give it a minute. So, like I always say, if you're going to invest, you need to have access to a financial website. I use Yahoo Finance. So, Thermo Fisher. The yield is 0.42. 0.42. That's less than 0.5%. Historical data. We're going to go to historical data. Now, $400. And they have a $1 dividend? That sucks. 1980. Holy cow. All right, so I'm going to say no to this one only because 1993, they had a dividend. Nothing till 1996. And then nothing till 2001. And then nothing till 2012. So that's not 20 years, and it's all scattered. 13, 15, look at this. 2012, 15. 2013, 15. 2014, 15. 2015, 15. 2016, 15. 2017, 15. What do you think? Do you think the company's profitable every single year? Profitable means this number should get higher, not stay the same. So no to TMO. Ooh, Riley is next. I love Riley. I actually own a bunch of Riley. I actually own more Riley than I probably should. RILY. All right, interesting. Look at that. Is that uncomfortable? What? Remember what I told you earlier? Never buy a stock unless you are okay with it dropping. Look at this. 32 down to $3. So they actually went down to 265. Can you believe that? From 32 down to 265. Yeah, if this is a game not for the lighthearted, because stocks can fluctuate like that. Now, I own a whole bunch of these. What do we have here? Dwayne Wood TMC. That's a Taiwan Semiconductors. Is that right? TMC, that right? Good option for a potential small but quick cash flow, TMC. Or is that Turner Movie Classics? I don't know. Lead Sponge. No! Rodney. Good evening there, Mr. Rodney. All right. MRK. Why do we need to check the yield? Sunny Bunny, the yield is your rate of return. Okay? So if you buy a stock or if you buy a CD and it gives you a 1% yield, if you put in $100 at the end of the year or whenever it ends, you get 1%. So 1% of $100 is $1. That's 1%. That's the yield. That's why it should be important for any time, because when you're buying something, you've got two opportunities here. One, is it capital appreciation? Is the stock going to go higher and higher? That's one. Or two, what is the rate of return? Do they actually have a profit? And what is that profit? How much are they giving you? Well, that's the yield. That's your profit at the end of the year. So 1%, yeah. I go for 1% a week. Not 1% a year. It just doesn't make any sense. If you say 4 qualified stocks and the market drops 20%, what then? Well, if you're not ready, okay, Dwight, if you're not ready for the market to drop 20% and you be okay with that, not a game you should be playing, okay? But here's the thing. Now, I got Harley Davidson at 35 back in October. Well, it's at 23 now. That's more than a 20% drop. So, yeah, I know exactly what you're talking about. But what do? Well, I sell covered calls against it. Even though okay, well, let me pull it up. HOG. Okay, here's Harley Davidson. The high is $40, and that was back in August of last year. But from 40, it dropped all the way down here to 20. That's a 50% drop. 50%. I got it 35 back in October, right here. And now it dropped down here. I still own it. However, I sell a covered call against it every single week. Now, it's currently at $24.71. That's the current price. So the closest strike price is going to be the 25, and that's going for 35 cents a share, well over 1%. But I'm not going to sell the 25 because that's too close. I'll do the 26s and bring in 0.5%. Well, 0.5% every single week still comes at 24% a year. But I have other positions that make up for the fact that this is only giving me 0.5%. Okay, but I've owned it at 35, and now it's down more than 20%. So I'm not really worried about stocks going up and down. What I'm worried about is the cash flow I bring in on a weekly basis. Okay, but if you get those called away at a lower price, won't you lose money in the stock? Okay, Dwight, okay, now you're relatively new here, so hold that thought for 1 second. I can feel my voice going. It doesn't take long, does it? All right, Dwight. All right, you ready? Okay, my weekly trades for 2025. This is all my trades so far this year. Okay, right here. Okay, this is week number 19th, May 5th to May 9th. Okay, week 18, April 28th to May 2nd. Okay, week 17, April 21st to 25th. See all these trades? You can click on any one of these. See? Halliburton, Macy's, Kohl's, Riley, Riot, Harley Davidson, Mara, Foot Locker, Macy's, Kohl's, ASO, same. Riot, Macy's, Harley Davidson, Alcoa. What do we have here? Altria, U.S. Steel, Coles-Riley. We got noise over here. Who do we have over here making noise? Oh, they just muted themselves. Okay, so I make a whole bunch of trades. All right, T-White. If you count up every single trade that I made so far this year, starting from last week, the week before, going all the way to January 1st. You see them all? Each one of these lines represents a trade. Okay, each one of these lines represents a trade. Okay, come all the way down. Keep going, keep going. Whoops, there's it is right there. January 1st. Okay, December 30th to January 3rd. That's first week of the year, first quarter. Count every single one of those trades. Okay, I can bet you there's over 200 or 300 of them. Out of 200 or 300 trades, I've lost twice. Two losers out of over 200 or 300. I'm not really worried about it. Okay, what I do consistently is I sell a covered call on every single one of my positions, regardless of where it is. See, account number 1. Okay. U.S. Steel, MPW, Intel, Altria, Harley-Davidson, Intel, and Riley. Okay, each one of these cells right here, each one of these comes to a grand total of 9,341. That's a 6.1% return just for account number 1, first week of the quarter. Okay, account number 2. Well, I only did 2 trades. Coles and MPW. But those 2 trades gave me $2,600 or 1.8% of my total account. And then over here, $4,800, 4.23%. Every single week, I give you each and every single one of the trades I do, how much it came in, what the rate of return was, and what the trades were. They're right there. Here's the what do you call it? The timestamp. Okay, what kind of a trade it was? Was it a buy or sell? How many? The quantity. Okay, what stock it was? What's the expiration date on the options? What was the strike price? Was it a call? Was it a put? Was it stock? What was the price? And was it a credit or a debit? Was it a profit or a loss? Everything is there. So out of all those trades, 2 losses. So I'm not really worried if the stock goes down 20%. Because my stocks already went down 20%. I have stocks that went down 50%. What do I got? Hold on a second. Let's get out of that. Let's go to there. Let's go here. And let's go there. And not Alcoa, not that one. Here we go. Harley-Davidson. Okay, I got 2,200 shares at $35.62. Well, currently it's worth 24. That's a 30% drop, and I still own it. Okay, I sold off the 23s this week and brought in $2.13 per share. Well, that's a nice rate of return. Okay, that's Harley-Davidson. Hertz, no, not Hertz. Coles, oh, you'll love this one. I got 3,500 shares at 15. Well, currently the stock is only worth $8. That's a 50% drop on Coles, and I still own it. I have no desire to sell it. Okay, I brought in 166 on a $6.05. Yeah, that's a nice profit too. Okay, to me it doesn't matter what the stock price is. I'm just looking at the momentum for this week. Where is it now? Where is it going to be by the end of the week? What covered call can I sell safely? Now remember, I already told you, I have no desire to go back to work, back and punching a time clock. No, thank you. Okay, I do safe trades every single week. Okay, I buy something, I sell something against it, a weekly option every single week. Milo, why are some green and some red? No. The reds are not losses. Green is when you buy, red is when you sell. It's not positive, it's not negative. The only time you get positive and negative is when you go to this right here. Profit and losses. Okay? See, The parentheses, those are losses. Okay? But, well, it's not there. Let's do this for a second. Let's go right there. All right. Anything in a parentheses is a loss. But parentheses, I still own it, so I didn't lose. Parentheses, loss, I didn't own it, I still lose. I didn't lose, I still own it. Okay, here, I still own it. Here, I still own it. The only loss here is this one right there, Altria. The only loss I have in this account. And that's since the beginning of the year. Over 100 trades I've made in this account, and I only have one loss. I'm 19. What do you recommend for dividend stocks? Miguel, I recommend education. Let's get out of this. You don't need to see this. All right, so hopefully that answers that question. Vapor to white, but those get called away. Yep, no. See, I look at every single day. I have a morning trading group, which we jump in at 9 o'clock every single morning. And we take a look at exactly what our positions are doing. Okay? Now, I stay on the morning calls for as long as you guys have questions. Okay, the longest one I ever was, I think, was 4 hours. I was on for 4 hours one morning because there was a lot of questions. Milo, why are some? We already did that one. How is Pepsi looking this week? Okay, Lord Detroit, we already looked at that one. What is your time? What is your time there? At this moment in time, it is 11 p.m. Aaron, sorry I missed your call. Could you go over rolling order of Foot Locker again? Oh, hold on a second. Let me finish up these questions. Detroit, that's awesome. Love it. Thanks for explaining. You're welcome. So what do we have here? So why do we need to check the yield? All right, we already did that question. American Patriot. Ooh, do you like stocks that are going down so you can trade covered calls? Only when they turn around. Because you got to remember, stocks go up. See, stocks go up, and then they come down. And then they go up, and then they come down. And then they go up, and then they come down. That's all they do. If you like a company, just follow it. Just look at it. Okay, if you zoom in here, okay, look at the movement. Down, up, down, up, down, up, down, it's going to go up again. That's all they do. If you like a good company. Now, when I say, hey, everybody, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. Now, The 10-Minute Trader was originally my 9-year-old daughter because it was supposed to be designed, the trading strategy I'm showing you is designed for her to implement 10 minutes. That's it. So before she went to school, she'd jump online and she'd do a few trades. 10 minutes was all it took her. That's what it was designed for. Simple, safe, predictable, consistent, no way to lose. 5 rules. Rule 1, never buy something that's not on the list. What do I mean by that? This is for my daughter. Never buy something that's not on the list. So let's get rid of this. Let's go to here. Let's go to here. There you go. This here is what EX dividend calendar. Okay, June 25th. Why are we looking at June? Because June is 2 weeks away. Okay, we're looking at these stocks right here. Because stocks have a tendency to go up in value just before the EX date. So for my daughter, rule 1 was never buy something not on the list. Okay? Now, these little green dots are companies getting ready to pay out a dividend. If a dividend is an indicator that tells you when a stock is going to go up, well, great. If I know this stock is going to go up, what kind of trade do I make? Do I buy the stock? Do I buy the option? Do I do a spread? Do I do a condor? What do I do? That's a good question. So for my daughter, it had to be simple. Well, there's only a few simple trades. And then it had to be safe. Well, there's only 1 or 2 that are safe. Extremely safe. Simple, safe, predictable, consistent, 1% a week. That's the goal. 1% a week is really not that much to look for. So 1% a week comes to over 50% a year. And I think that's a pretty damn good starting point for most of the beginners here. Okay, so if you're new and you don't know very much, well, the trading strategy was created for a 9-year-old, specifically for her. Simple, safe, predictable, consistent 1% a week. That's over 50% a year. If you compound it, you can double your money in 14 to 15 months. Well, that's pretty damn good. All right. What else do we have here? You're showing how to be profitable. Gamer's Paradise, how you doing? Do you like... Okay, we already did that one. Thanks for explaining. Great. Hey, I'm caught up with all the questions. Let's go take a look at something else. That being said, next on the list, advanced... Wait a minute, we didn't finish up with Riley. Let's get back to Riley. Let's get back to Riley, because I own a lot of Riley. There we go. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at the motion. Down, sideways. Well, that's pretty easy, right? Okay, what did the numbers look like? Well, first thing tomorrow morning, I could jump in at 341. Now, for those of you saying, well, I can't find stocks below 20 bucks. Well, here's one right here, 341. I own a bunch of these in more than one account. I think I have Riley like 5 accounts. Well, here's why. At $3.41, I sell to $3.50, I pick up 8 cents. You do know that 8 cents is more than 2%. Okay, it's a $3.41 stock. If I buy it at $3.41, sell the $3.50s, I can get over 2%. Do you realize that 2% every single week is over 100% for the year? 2% a week is over 100% a year. Okay, so let's finish looking. The last 30 days for Riley. 18, right there. What do you think? Here's the high, way up here, right around $4. Here's the low, right there. Now she's going up. Is there enough room for it to keep going? Or is it something that's going to continue going sideways? Well, I like Riley. I have a whole bunch of them. I don't mind. And no, it's not a recommendation. No, it is not a tip. Don't listen to a damn word I say. Do your own research. Okay? Never blindly listen to some random guy on YouTube. Okay, well, I'm actually on YouTube. I'm on a lot of channels. But anyway, if you want to chat, send me a number. I'll give you a call. Seriously, I will. All right, so let's keep on going. So I like Riley. Yeah, I would buy it. And let's take a look. No, I'm not going to do that because we already did that. Okay, we know it's over 2%. Next on the list, Advanced Auto Parts. And yes, I do own some Advanced Auto Parts. AAP. Okay. Ooh, I like that. It should take you 3 to 4 seconds. That's it, 3 to 4 seconds. 5 things, that's it. 5, ready? 1, high. 2, low. 3, where was it a year ago? 4, where is it now? 5, what's the motion? Down, down, up, down, up. That's the oversimplified. Okay, great. Where are we? Well, we're currently at 35. Well, the 35s are going for 233. Now, I don't know how good you are at quick math, but 233 on a $35 stock, was that 7-8%? That's a nice number if you think about it. But look at here, right there. That's awesome. So let's zoom into that and take a better look. A year ago, we are at 74. Now, remember I told you, if this is not a game for weak-hearted, the high is 74. Look where the low is, 30. That's more than a 50% drop. Okay, so even though it's a 50% drop, if it's here at 74, if I bought it there, I'd be selling the 75s. As it dropped down to 60, I'd be selling the 63, 64, 65s. As it dropped down here to 40s, I'd be selling the 43s, 44s, 45s. I always want to go, for me, 3 to 4 strikes out so that I'm not at risk. And then I look at it every day. Seriously, every day. First thing in the morning, I jump in and I take a look. Well, because here's the thing. If you have a garden and you don't keep an eye on your garden, you don't water and weed it every day, well, there's going to be an issue. Well, here's a better one. If you have children, if you don't feed them and take care of them, what do you think is going to happen? Well, this is my children, my money. Okay? My money, I look at it every single day. And I want to make sure, what did I buy it at? Where's it at now? Am I at risk? If so, what can I do in order to not lose? Because remember, I'm 61, I'm retired. I don't have the luxury of losing. Okay? I have 2 losing trades so far this year. That's it. That's it and that's all. That's Arnold Schwarzenegger's new line. That's it and that's all. All right. Secretariat. Advanced Auto Parts has earnings this Thursday, hence the large premium. Okay. Okay. GME Kitty. Okay. PENG, never heard of it. We want to do covered called. Okay. In support, I assume. I'm here for the arguments. Cool beans. Do you invest the dividend kings, especially those in the SP 500s, or just when they pay out? Ooh, good question. Somebody thinks that's funny. You've been hitting the... I have no idea what that means, Rudy. You've been hitting the gym? No, Rudy, I'm just athletic. You know, I play soccer. I was going to play soccer this morning. For some strange reason, my feet are sore for no reason. But yeah, I still play soccer in my old days. Love it. Thanks for explaining. You got it too right. So when you're selling a call, when the stock is at a loss, do you make sure you don't get called away? Absolutely. That's why I look at it every single day. Okay, first thing in the morning. Okay, now, when I was working, I do all my trades the night before. Well, now that I'm not working, I do it in the morning, just before the market opens, to make sure I'm not going to lose. Secretariat, I know you don't do CSP, cash secured puts, but perhaps AAP would be a good candidate deep in the money. Okay, we'll take a look at that. Hey, what's a go-to strategy you use? Covered calls, safe, simple, easy, and you can do covered calls in an IRA. Some trades you can't do in an IRA. All right, so let's take a look at Advanced Auto Parts. Okay, it's the high, the low is, look at this, down, up, 30, 35s. 35s are going for a nice amount. Cool beans. Let's take a look and see if it's okay. All right, so a year ago, 75. Let's look at the last 30 days because we're running out of time. Now, the reason why I want to look at the last 30 days, because the last 30 days gives me a good idea of what direction it's going next. Well, this one's going to be a no, only because here's your 30-day bottom 30 days ago, and Friday was your 30-day high. This is where I usually sell. Now, I already own some Advanced Auto Parts, and with the dividend coming up, I don't really want to get rid of it because it's giving me a nice premium every single week. So I don't even know what my Advanced Auto Parts looks like at the moment. I think it's right there. There it is right there, Advanced Auto Parts. All right, yeah, all right, so I'm in Advanced Auto Parts at 39. Not even on the chart. See, 30, I first got in at 43. Now I'm in at 39. I sold this week's 33s, picked up $1.88. Well, that's a nice fat premium. All right. Okay. Josephine. Night Slayer. What's your thoughts on Tesla stock? Nope. That's my thoughts on Tesla stock. No dividends, no think. What platform am I using right now? This is called Think or Swim. It's available through, hold on. It's Think or Swim is available through Charles Schwab. Okay, see Harry? Google? No. Google won't make my list for another 19 years. Okay, when I say any stock that I buy, me personally, okay, two options. Number one, 20 years of increased profitability means their dividends go higher every single year. Google only has 1 year profits. One year, that's it. Unless Warren Buffett decides to jump in and buy Google. If it's on Warren Buffett's list, I'll buy it. If it's not on Warren Buffett's list, I'm not going to buy it. I got 5 lists I look at. List number 1, Dividend Kings. Any and every company that has increased their profits for 5 decades. That's 50 years. Dividend Aristocrats, 25 years increased profits. Dividend Champions, 25 years increased profits. There's a difference between the two. Dividend Aristocrats are a little bit more picky, and I think there's only 67. But Dividend Champions, there's 150. 150 companies that are consistently profitable for more than 2 decades. And then we have list number 4, the Dividend Contenders. Now, these companies have increased their profits for 10 years to 24 years. Not quite 25, but 10 to 24 years. I don't do all of them. And then coming up the tail end, we got Warren Buffett's list. Now, if it's good enough for Warren, it's good enough for me. If it's on Warren Buffett's list, I don't bother looking. Okay, I don't look at the details if it's on Warren Buffett's list. If it's on my list, I don't look at the details because they've already picked them. They're consistently profitable and they have weekly options. That's the only 2 criteria. Only 2 criteria. All right. Can you sell a 3150 cash secured put on AAP and withstand a 10% earnings decline and still make an approximate 3%? Well, let's take a gander at it then, won't we? Okay, so the 35s are going for $229. Okay. Now, here's where I have a little minor issue, Secretariat, okay? In order to do a cash secured put, you need a chunk of money. That's why I call it a cash secured put. You're going to take a big chunk of money and put it aside. And then you're going to get your rate of return, $229. Well, a covered call is basically the exact same thing. You're taking a big chunk of money, you're putting it aside, and you're getting a return. So all things being equal, okay, the cash secured put is going to give you $229 per share. But a covered call is going to give you $233 per share. Now, I don't want to quibble but a few dollars, but $233 is more than $229 by a factor of 4 cents. Now, I know 4 cents is not a lot of money, but it's 4 cents per share. Now, 4 cents per share, well, if you got 1,000 shares, yeah. If you have 10,000 shares, yeah, you know, it all depends on where you are. I have a chunk, but do not trust a potential decline. I'd sell the 3150s. Holy cow, the 3150s. Holy, you're going way the hell in there, dude. All right, so 3150s, you're collecting 89 cents a share. Okay, that's more than 2%. Okay, so let's see what it looks like. Okay, let's just do one contract. Okay, so the maximum profit you're going to make per contract is $89. Okay, you got to put up 3,100. Well, let's find out what that comes to. $89 divided by 3,150. 2.8%. Well, that's not bad. Do you really think it's going to hit 3,150? I don't know. But 2.8% for CSP. Which one is that one? Advanced Auto Parts. 2.8. Nice. Well, let's see what a covered call looks like for Advanced Auto Parts. All right, let's get out of that. Let's get out of that. Let's get out of that. Let's do this. Covered stock. Let's do this. I only need to see 8 of them. And it's currently at 35. So the 35s at the money would be right there. And just one would be there at the market right there. And here's what it sounds like. Buy one covered call advanced auto parts. 23 May, well, that's this coming Friday. The $35 call option, well, 237 off of 3,200. Well, that's a nice return. Calculator. What's my calculator? 237 divided by 3263. 3263. Grand total of 7%. Well, I like 7%. Okay? Nothing wrong with 7% whatsoever if you like advanced auto parts. Oh, X in the box. iBit and Misty? Yeah, no. North American Gamer. Is this crypto? No, it is not. All right, let's keep on going. What was the ticker symbol for Riley? RILY. So when you're selling a call, when the stock's lost, do you make sure you don't get it called away? Absolutely. What time tomorrow should I do a covered call on AAP? Okay, Stuart Quick, I don't make recommendations. I don't. If you're going to do it, that is totally up to you. I don't tell people what to do. In fact, I always tell people to do the opposite. Do your research. Does it make sense for you? And keep in mind, Advanced Auto Parts has its dividend coming up soon. Well, that makes a big difference. Okay? Because the earnings report comes up, the stock can go either way. Okay? You could buy it and it could drop. So always do your own research. Don't listen to a damn word I'm saying. Ish mi amor, ¿qué pasa mi? Oh, ish mi amor. How are you doing today? All right, so we are at 11:21. So we had answered all the questions. All right, so from there, let's take a look at what do we have next. Ford. Ooh, I like Ford. Wait a minute. AAP. That is 7.2. I think I might buy some more just because I like the numbers. Because I have no intention whatsoever of selling my advanced auto parts. All right. What's next? Ford. Everybody loves Ford. Ford. Let's hit it early for Ford. Okay, single. And get out of there. And here we go, Ford. No, I do not own any Ford. I do own Advanced Auto Parts. Okay, now we've been watching this thing for weeks. Look at this thing. Okay, can this thing keep going up? Well, apparently it can. But I'm not going to buy it. Okay, now here's the bottom right there. Okay, here's the bottom right there. Look, 1, 2, 3, 4, 5. 5 weeks in a row, this thing kept going up. At what point is this thing going to turn and come back down again? I haven't seen Ford going up 5 weeks in a row in a long time. But look, that's 5 weeks. Okay, is it ready for a pullback? Maybe it is, maybe it isn't. I don't know. But I don't buy at the 30-day high. It just doesn't make sense to me because stocks go up and then they come back down again. Next on the list, TTD. Who the heck told me about TTD? Nope. Okay, 30-day bottom, 30-day top. Now it's coming down. Okay, Simple. It's really not that difficult to read a chart. Here's the high, here's the low. Here's where it was, here's where it is. Look, the bottom's here. Nice slide. Gaps up here, gaps up here. Now the high is right there, just above 81. And then Wednesday's lower, Thursday's lower, Friday's lower. That's 3 days to the downside. So no. Hey, 310 Life, how are you doing today? Halliburton, huh? Ooh, look at Halliburton. The high, the low, where was it? Where is it? Look at this. Down, here's the bottom, bounces up, back down, back up. Okay, what's going on there? Well, let's zoom in a little closer because I want the last 30 days. Last 30 days would be right there. Okay, 30-day high, 30-day bottom. See, look at this. Profit taken. Now she jumped up, pulled back down. 1 day to the upside. I'm going to put Halliburton down. Take a look at it. But not this week. Uh-oh. Dylan wants Target. Target. You got to watch out for Target. They have nasty black swans. They do. Look at it. Here's the high. Here's the low. Look at the look at the movement. Sideways, gap down, up, down, up. Okay. Interesting. It's the last 30 days or so. Well, that's interesting. Here's the bottom. Here's the top. Pulled back. Now she's going back up again. Again, not something I look into until like Tuesday, Wednesday, Thursday, something like that. David, do you invest in charging companies like Plugs or ChargePoint? Nope. David, if the company hasn't been in business for at least 2 decades and have 2 decades worth of consistent profitability, it's going to be an automatic no. There's over 10,000 different companies to look for. It's not that difficult to find a good quality, profitable company. Okay, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's over 300 companies right there that are consistently profitable. Why would I look at anything else? And I want 2 decades of profits. I don't want a new company. Okay, I want a company that has proven its worth for me. And me, it's 2 decades. Okay, let's all keep on going. Okay, I don't know who just chimed in on YouTube, but I can't read that. No, I want to help you out with whatever question you're asking. My hair, what a mess. All right, but I don't know. I can't read that. Next, we have ADM, Archer Daniel Midland. ADM is a dividend king. Oh, also, Target, we just looked at it, dividend king. 5 decades. Okay, 5 decades of increased profits. Okay, ADM, same thing. 5 decades of increased profits. Here's your high, here's your low. Look at it. Top, bottom, now she's bouncing up. Okay, she's bouncing up at the bottom of the year, which was a couple of weeks ago. So let's zoom in and take a look at that. Okay, here's your bottom. She shoots up, pulls back, shoots up, pulls back. Not this week. Maybe Wednesday or Thursday, but not Monday or Tuesday. MDLZ, Mandalese, MDLZ. Mandalese, check it out. High, low, where was it, where is it? Look at this, down, up, sideways, 65. Well, the 65s are going for 90 cents, really? 65, 32, 66s. 30, okay, yeah, barely makes the 1%, but let's take a look. A year ago, we're at 70.62. The high of the year, look at that quadruple top, 76. Okay, from there, she hits a bottom in February at 53. So it goes from 76 to 53. Okay, well, your top, your bottom. And from there, look at this, sideways. Look at that. Down, up, down, up, down, up, down, up, down. Now she's going back up. 1, 2 days. 2 days to the upside already, right there. Can you see it? Okay, the bottom is there, and now she's heading up. So let's zoom into that. There we go, right there. That's awesome. Look at the motion. Okay, up, down, now it's going up. Here's your bottom right there, and it's bouncing off that 1 day, 2 day, 65. This thing actually fits. So the 65 is going for 90 cents a share. Or the 66s. 66s aren't paying enough. So it has to be the 65s. It's always going to be about the numbers. Does it make sense? Am I going to be profitable? Is this a company I want to hold on to and pass along to my kids? Is it? It's a simple question. Do I like this company enough to hold on to it for the long term? That's something you should seriously think about if this is the type of investing you want to do. Now, there's a whole bunch of people just like me doing the exact same thing in different channels. They have a different approach. They have a different income. A different outcome. They're looking for something differently than what I'm looking for. I'm looking for safety, predictability, and consistency. That's what I'm looking for. And especially preservation of my portfolio. I don't want to take a risk. 310 Life, CAG. What the heck is CAG? CAG. Is that Cargill? Conagra. Okay. Ooh, look at that. 3 to 4 seconds. It should also take you. High, low was this. Look at this. Down, up, down, up, down, up, down. Now it's turning right there. Take a good look at that. Last week. Let's zoom into that. Last 30 days. Here's the high right there. Here's the bottom right there. 2 days to the upside. That means tomorrow. If this thing is higher, that will be day number 3, which is a great indicator for me. This is for me. You guys got to figure out what's right for you. I like 2 days to the upside from the bottom. Bottom was Wednesday. Thursday was higher. Friday was higher. Okay, currently it's at 23. The 23s are going for 20 to 30 cents. Ouch. Might not get your 1%. Because 1% of $23 is 23 cents. Well, this is not 23. Yes, do it quick. I don't think it's going to go to the moon. Okay? At least not as quickly as you want it to. Okay, but seriously, before I would buy this, I'd wait to see what these numbers open up at in the morning. Because in the morning, all these numbers are going to change. As soon as the market opens, the market changes. Everything changes. That being said, it is 11:31. I'm live every night from 9 p.m. until 11:30 p.m., which it is 11:31. I've answered every single question. I am done for the evening. So I will catch you guys again tomorrow. So you guys on the Zoom, I will catch you guys in the morning. Paul, Steve, have a great night. Have a lovely, lovely evening. Lovely evening and done. And you guys over here on YouTube, have a lovely evening. And you guys over here on Instagram, have a lovely evening. And you guys over here on TikTok, have a lovely evening. And we'll see you again tomorrow. You guys here? Wait, did we look at sun? No, we did not look at sun. Sorry. Catch me tomorrow.